The democratization of the stock market, the rise of the meme stock investor, the prolonged market rally. What do all these have in common? No-fee trading platforms like Robinhood that have expanded access to trading for practically anyone with a pulse. Remember the days when you'd see a commercial on TV, something like $9.99 per trade on E-Trade, $6.95 on Fidelity, $4.95 on the legendary Charles Schwab? Well, those days are long gone. Just like those discount names and others upended the full-service cold-calling stockbroker business model, if you've seen the movie Wolf of Wall Street, then you know what I'm talking about, so have trading apps now upended them. Offering commission-free trades, these disruptors have created a race to the bottom in terms of fees. It's a brave new world out there, and of all the companies to go boom and burst during the pandemic, Robinhood is one of the ones to come out on top. Literally, just think about it. It had the perfect storm with there being nothing better to do but stay home, on your phone or your computer, on Robinhood, with stimulus checks rolling in, not to mention enhanced and extended unemployment benefits. So, just where is Robinhood now? It has definitely been in the news a lot lately, so we're here to break it all down for you and catch you up. But before we do, just want to drop you a little reminder to be sure to like our video, subscribe to our channel, and as always, we love to hear what you think, so drop us a comment below at any time. Robinhood may be a relatively new name for most of you. Perhaps the first time you've heard of Robinhood was just 1 or 2 years ago, but the reality is that Robinhood has been around for 8 years already. True to its namesake and consistent with what we have already seen on the news, Robinhood was founded on the premise that it wanted to provide everyone access to the financial markets, not just the wealthy. Unsurprisingly, most of its customers have been millennials and half of its customers use the app on a daily basis. Over the past year, Robinhood has come under scrutiny, but not always fairly. It was originally widely publicized that Robinhood and its users were largely responsible for the sharp spike in the market prices around the February 2020 market crash. But a later study actually revealed that they had little to nothing to do with it. Still, things haven't totally let up on Robinhood, as just this past month, it had to fork over $57 million in fines to the FINRA, plus $13 million in restitution to clients affected by the outages and misleading communications back in March of last year. Now, as you probably heard by now, Robinhood is planning to go public, but again, true to its namesake, it is doing it in its own so-called democratic way. It plans to reserve 35% of its new shares exclusively for its retail customers. It's even targeting a $40 billion valuation. Ironically enough, the way IPOs work, Robinhood customers may actually end up paying a premium for their shares. See, what happens is that when an IPO is released, only a measly 10 to 20% of the shares trade in the open market. Insider shares aren't released until about 180 days later, and until they are, the artificially low supply of shares will have artificially bid up the price of all shares, insider shares included. Imagine Robinhood becoming its own meme stock, and those are the shares Robinhood customers will buy. So much for stealing from the rich to give to the poor. And speaking of rich, let's go back to Robinhood's potentially rich valuation, $40 billion. Just how can anyone justify this? After all, Robinhood doesn't charge any commissions. Its secret is what is known as payment for order flow. This means that Robinhood itself isn't executing the trades. It's almost like it's aggregating them, packaging them, and shipping them off to distributors, called market makers, who, in turn, pay Robinhood for those shipments. Those shipments represent business to both Robinhood and the third-party makers, and the business lies in the deal flow, transaction volume, and the bid-ask spread for the market makers, and not every trade is created equal. To be more specific, Robinhood makes a bulk of its money from option trades. Common knowledge on Wall Street is that hardly anyone makes money in options except those who sell them to you. Again, so much for democratization, am I right? It's been reported that Robinhood makes 9.5% out of option accounts, 1.2% for crypto, and just 0.2% for stocks. But any way you look at it, Robinhood is milking it big time. This will certainly be a boon for investors, though maybe not for Robinhood investors forced to buy insider shares from the IPO. But it's not all fun and games with no downside. Currently, Robinhood actually has various legal proceedings that could result in very big losses. These include about 50 class action punitive action lawsuits, 1,600 individuals jointly pursuing arbitration, and don't forget the whopping $70 million in penalties recently charged by regulators that we had mentioned earlier. And fun fact, the state of New York has started asking questions about money laundering. To put this into context, though, Robinhood currently sits on $4.8 billion of cash and cash equivalents according to its Form S-1 filed with the SEC ahead of its IPO. But even assuming a healthy pile of cash for legal settlements, such payouts will undoubtedly put downward pressure on an otherwise richly valued stock. Potential buying opportunity, anyone? Another concern people are talking about involves Robinhood's reliance on crypto. Roughly 6% of its first quarter revenue came exclusively from Dogecoin transactions. 17% came from crypto trading overall. If Dogecoin and crypto are here to stay, then this is no problem. But it's still good risk management for Robinhood to find ways to not be so reliant on it. The remaining 81% comes from that payment for order flow strategy we talked about earlier. Though it may still be a good idea to diversify away from such a large concentration, we're inclined to say institutional clients can be more reliable, especially once their core systems and procedures come to adapt and rely on Robinhood. Still, Robinhood is growing strong. As of the first quarter, it has 18 million net cumulative funded accounts. That represents 44% growth since 2020, when it had 12.5 million accounts. So, what do you think? Are you bullish or bearish on Robinhood? Do you use Robinhood? Would you invest in it as a Robinhood customer? Let us know in the comments below. Now, what does the Robinhood interface look like? Well, it's fairly simple and easy to use, but its genius lies in its trimmings. Like releasing virtual confetti at the submission of a trade and default notifications aimed at spurring impulse trading. It's definitely not geared towards the buy and hold crowd, though that's not to say you couldn't use it for that. Extensive research shows that day traders end up breaking even, if not losing money in the long run, and research specifically on Robinhood shows that many of their traders are nothing more than what's known in the industry as noise traders. In other words, it's essentially used for gambling. What do you think? Warren Buffett just last month said as much. I mean, to a degree, it has to be true. Robinhood makes more money the more daily transactions it successfully encourages its users to make. Are these valid points to consider, or is any market a valid market, making Robinhood still a worthwhile investment? After all, it's still up to the individual user. Let us know in the comments below. Robinhood recently fired back at Buffett, and certainly didn't hold back. In a very anti-boomer, Gen Z-like response, Robinhood's press team said, and I quote, "People are tired of the Warren Buffetts and Charlie Mungers of the world acting like they are the only oracles of investing. And at Robinhood, we're not going to sit back while they disparage everyday people for taking control of their financial lives." Talk about telling us how they really feel, but that aside, they still felt the need to dignify Buffett's concerns and pointed out that the majority of Robinhood's customers are buying and holding, and even investing in stocks Buffett himself holds. At the end of the day, Robinhood brings with it a lot of promises and opportunity, but like many other companies we've covered, it also has its fair share of detractors. It's too early to tell for sure, but chances are it's here to stay as it solidifies its market and its services. As always, thanks for joining us. Don't forget to click like and subscribe, and I'll see you next time.